This week on Beyond Bitcoin, it's all focused on Bitcoin. Why we think it's one of the best times to own Bitcoin on a risk reward basis. So join us and hear from our analyst outlining Bitcoin, what the headwinds are, what the tailwinds are, and where the price may be heading. Hear from you then. Good morning. Welcome along to another episode of Beyond Bitcoin. My name is Derek Graham, and here with me today, of course, is Greg Galton, our senior analyst. G'day, Greg.
GM, Derek.
Look, very Australian to say good day first thing, but of course people listen to us from all around the world. But we are coming from Australia at the moment, and we've been particularly busy in the last week because we've been attending a conference here, amongst other things. And a lot of that discussion, of course, was around Bitcoin when it comes to crypto. And during that period of time, we missed last week, which is not like us at all. But during that period of time, we've gone from a fear and greed index that was sitting down around 10, 12, and really a few days before that was sitting to a point where the needle looked like it was bleeding. And we're sitting back up at 46. So we're basically back to the mid positions again so quickly. It's extraordinary how quickly sentiment can change. There's a lot of bullish factors that are happening for Bitcoin that not many people are following or watching. So we thought we'd cover that today and see what you think of this, some of the more important determinants that are happening for Bitcoin so that people can maybe lift their eyes off what someone referred to me the other day as being terrified of what was happening.
Yes, we're all terrified with what's happening with the Orange Man in the White House. But yeah, it's very interesting. I guess let's unpack a little bit what you've just your statement there, Derek. Is back on I think it was about the 11th of March. Bitcoin was back down to the mid $76,000 level, retraced all of that way back after being well into the 100,000 levels for most of January and February. Had a bit of a pullback in late February and a bit of a recovery, and then weakness into March. And a number of different factors there. I think there was a bit of too much optimism priced in on Trump's announcement on the executive orders. Strategic Bitcoin Reserve was announced, but they're not going to go out and buy 1 million Bitcoin on market the next day. So the market was a bit disappointed with that. And also what you've seen over that period is a lot of ETF selling. So what we understand has been the case is that a lot of traditional hedge funds were buying the Bitcoin ETFs and then selling the dated futures against them and benefiting from that what's called the basis trade. And that was earning them about 10% per annum. And that was it's a very good way of using Bitcoin's volatility to earn income against it. And that was their way of doing it. And then, of course, what happened is as the Bitcoin price started to weaken, there wasn't quite the same return in that basis trade anymore. So they started selling their Bitcoin ETFs, which really compounded that price move down that we saw. And that then generated the fear and greed index to kick in and go from neutral to fear to extreme fear. And everyone to be concerned that the sky is now falling in, and people on crypto Twitter were calling the end of the bull market, the beginning of another winter, and yeah, it was really quite a sad time. But looking forward, we've had the Fed still very dovish in their comments. Powell is talking about inflation being transitory. I have some issues with him using that term, given he's got it so wrong with it using transitory in reflection of inflation during COVID. But anyhow, let's give him the benefit of the doubt. But one thing that he did come out and say that I think a lot of people missed is that the Fed's winding back its QT, its quantitative tightening, and that's been in play since 2022 when the Fed just printed dollars and we had $9 trillion deficit there, and they've been slowly trying to wind that back. It's back at about $6.8 billion at the moment. So basically what they're doing is they're not buying back treasury securities, they're letting them expire, and so they're taking that money out of the system, they're taking that liquidity out of the system. Now they have announced that they're winding that back. They're not ending it yet, but they are starting to wind back. Now, the key inflection here the market's proposing is, do we start to see the start of QE again, quantitative easing? Our view is probably not this year, and unless something really dramatic or drastic happens to the US economy. If we start seeing the unemployment rate spiking, if we start seeing GDP growth slowing and even going negative, then I think you will see the Fed doing more than their 2 rate cuts this year, and maybe there's quantitative easing by the end of the year, but we're certainly not counting on that yet, although it's very hard to predict what Trump's view on the economy is and what he's trying to achieve in terms of an economic slowdown to force Powell's hand into cutting rates in the short term. So there's a bit of a sort of a playoff going on there, but there's also some interesting other on-chain data that's worth looking at as well.
On the positive note, of course, we've seen fairly low levels of BTC on exchanges, and we've seen the whales hodling. And that kind of combines with what's also been happening with strategy continuing to increase their con note sizes. Yeah. So there's still some things happening there. GameStop, of course.
GameStop, a new entrant, so a company that can't make any money out of its core business suddenly decides to invest in Bitcoin. What about when those companies that actually make money on their core business start investing in Bitcoin, like a Microsoft or a Meta and those guys? So that'll be interesting to see when that comes through. But yeah, $1.3 billion raising. They can oversubscribe it by 200 million, so it could be a $1.5 billion. Saylor's had good success with his raising. I think $780 million off the top of my head. So he now owns well over 500,000 Bitcoin. And yeah, the exchange numbers that you mentioned, they're the lowest they've been in 7 years.
Wow.
So that tends to be indicative of bullish conditions. If people are prepared to hodl
Yes.
their Bitcoin in their wallets rather than putting them on exchange, which normally tends to mean they're about to sell them. By taking them off exchanges means they're looking to hold them for the long term. They have more confidence in the long term. So that metric is amazing. So that's a very interesting metric. Plus whales, large sort of holders are continuing to between 10 and 1,000 Bitcoin. They're all hodling at these moments in time. They're no longer selling into the market strength. They were sellers above 100,000. At these levels, 85, 86, 87,000, it looks like they're buying again. We don't know whether we've seen the floor already, but we talked about it last week, the previous week, that we've seen 11 times over the past decade that Bitcoin has dropped 25% or more. We've had that happen in the past 6 weeks. It's just all part of the natural process. And as they always say, zoom out. Don't focus on the short term. Look at Bitcoin over a much longer time frame, and you won't get sucked into these short term market moves.
The GameStop in doing an offering for 1.3 billion, that is truly brilliant. Because when you think about it, probably the majority of their investors and shareholders were relatively young speculators that decided to take a shot at Wall Street and, of course, create the great movie, and exactly what happened. And they won. And they're still there as a community. And, of course, that community is highly likely to be Bitcoin owners or predisposed to Bitcoin ownership. I think that's a really clever move. And GameStop could become the next strategy, frankly, and very clever move. Yeah. Look, we've often talked about M2 money flow. Why don't we just finish off today's discussion with just how important M2 money flow is for Bitcoin? It has a correlation, I think about 0.89 or so. You can correct me there, please, in regards to its correlation to NASDAQ and the major markets. So it's fairly highly correlated to NASDAQ and the major markets, but it is strongly correlated to M2 money flow. In other words, the availability of money to do risk on investments.
Yes, certainly all risk on assets are very highly correlated to M2 money supply. It's what fuels that growth in those asset prices typically. Yeah, Bitcoin has a well above 80% correlation. It's the highest correlation of any asset class to M2 money supply, and you've recently seen that starting to spike significantly. Now there's a bit of a lag between when M2 money supply grows and it flows through into risk on assets like Bitcoin. We think it's about 107 days seems to be about the ideal fit. That some work that's been done, not by us but someone else, that we've had a look at and we agree with, about 107 days. So looking at the bottom there, it looks like around about 30th of April is when that, if you apply that lead to the Bitcoin price, that we see that correlation coming through. And that M2 money supply growth really being driven by China. They are really very much looking to stimulate their economy. I think they're in recession at the moment. They won't admit it. The official numbers will never show that, but
Mm.
they are trying to stimulate a declining property sector and a declining retail consumer sector. So they are pumping money into those two sectors to try and support the building industry and the consumer facing
Yes.
industry, very much as China moves away from a global manufacturing hub to a global domestically focused consumption hub. So their M2 money supply is growing rapidly. You're also seeing a fall in the in the value of the US dollar. That has an effect on terms of growing global money supply as well. And that's very much inversely correlated to the US dollar. So when the US dollar falls, Bitcoin tends to rally because of that impact it has on M2 money supply. So all of those factors give us confidence that into the second half of the year, we should see a significant move back up again in the Bitcoin price. We understand that now is the time that a lot of people are concerned about recession, they're concerned about global tariffs,
Yes.
but we think a lot of that's already factored into the stock prices and token prices.
Yes.
The market is always looking forward by at least 12 months, and I think it's already started to factor those things into prices. And if we actually do start to see a recession, we think that the market will rally on the back of that because it means more rate cuts coming from the Fed and maybe even the start of QE. And that's incredibly bullish for the outlook for risk on assets and especially Bitcoin. We're still, I'd say, mildly optimistic on the outlook. We would never want to be wildly optimistic because it doesn't behove us to do that, but we certainly, without providing any financial advice, just continue to see that strength into the second half of the year, and therefore we view the current weakness as a buying opportunity for people.
Yeah, and
For
we're acting
investors,
upon
yeah.
that. Exactly. And so it is extraordinary, human nature, and we're not immune
Do you
to
mean the
it.
band or human nature?
That band, that's a long time back, I think. And so we've looked at this during the period of time that Bitcoin started to head down. There were a lot of very bullish signals out there. The suggestion that clearly that Chopo 2.0 had disappeared, that the strategic Bitcoin reserve was on the way, yet the fear of tariffs and the disruption caused by Trump's proposed strategy for the economy frightened everybody. And so, against a bullish environment, Bitcoin dropped from its peak of 108,000 odd down to about 76,000. And I believe, like you say, these concerns now have been factored into the price. And Bitcoin today has risen back towards 87,000. And Bitcoin at 87,000 is still a great buy, as Bitcoin was at 108,000 in our long term view. And that is us. We are hodlers and we are builders in Bitcoin. Anyway, we hope you've enjoyed this brief update on what's happening in the market, mostly focused on Bitcoin this time. So, Greg, any final comments on what's happening to Bitcoin then?
Yeah, thanks, Derek. I think I'll just make one final comment, and that is investing in Bitcoin has always come with risks.
Yes.
Buying it very early on, you had the risk of what exchange were you going to buy it on? Did you buy it on Mt. Gox, or were you sending your PayPal to some guy that did it on the weekends that was to peer? What was the wallet that you were holding your Bitcoin in? There's always been risk, but I would argue now, even at Bitcoin at 87,000, on a risk-adjusted basis, it may now be the safest time to buy Bitcoin that it ever has,
Interesting.
because the concerns about government regulation, government trying to ban it, government removing it, those have essentially gone with the US moving to a strategic Bitcoin reserve. They're recognizing Bitcoin as a strategic asset. That means it's making its transition into the normal world, the investment world, as an asset, as a
True.
proper reserve asset.
Yeah.
So the risk of buying Bitcoin, apart from the price moves, and the price moves will always be there, and the volatility will always be there, but the risk of buying Bitcoin at 87,000 is probably as low as it's been for a long time.
Yeah, fascinating. Great synopsis. So if anyone's got any questions along the way, you're always welcome to email through to us. And don't forget to like and subscribe, and we'll keep updating on what our views are on the market going forward, and our views are of Bitcoin and all things blockchain. So for now, goodbye, Greg, and thanks very much. See you soon.
Thanks, Darren.